Damn it. Damn it, that was a good intro. Damn it. I was so good. Where is damn it. That was so good too. I can't redo it. I can't redo it. All right. We are out of the dining room. We're back into the office feeling really good. I can't believe I didn't have my mic on. Again, Seymour Rivers was not here to remind me. If he checks in later on, I blame him. I blame him, my producer, my unofficial producer. So we are out of the dining room. No more monitors. Everybody in the family's happy that I'm no longer on the main floor. I am back in my office, feeling really good, psyched for the new trading week. And we are bullish. Why are we bullish? Well, we've been talking about it for a couple of weeks now that things were setting up. The only thing that wasn't setting up were the markets, meaning the charts. We were seeing the potential for a break below the June lows. In certain instances, we got the break below the June lows, and we, however, reversed. Certain sectors did not close down below the June lows. Discretionary names of all things did not close down below the June lows. So we're feeling more optimistic now. A great week on the week. We're going to talk about the reasons why. What was the nail in the coffin on the week that caused us to turn bullish? And I put out today, it's it'll probably be on the end of this video, but it's also on YouTube and on the website. Best stock charts for the new trading week. Check it out. And we're going to talk about, as we always do, we're not here primarily to make money. What we're here to do is to manage risk. And if you looked at my natural gas trade last week, you'd be saying, how did you manage risk here? We stayed small. We stayed small because we got killed on that trade. We're still long. We're going to sell more covered calls in a rally, and ultimately it'll turn profitable, but it's going to take some time. So stay small right now. Don't get overly aggressive to the long side because there are a lot of issues that are still out there that can cause this market to roll over, and it has nothing to do with the stock market. A lot of it geopolitical. Let's say hello to people. And our old friend, Franklin. Evening, Bob, and hope you enjoyed the weekend and caught up on some well-deserved. I did. It was very, very good. It's sober October. This is what, day 23? Day 23, so no alcohol for the month of October, but I have been indulging in cigars. And in fact, normally sober October, I do no carb or I do heavy workout training. I can't do that with the hip. So I made sober October a little bit fun this year. And I just been going nuts with sweets, black and white cookies, Entenmann's after this show tonight. Looking forward to it with a nice tall glass of milk. Sober October. Luis, happy Sunday. Patrick's on. Hello, Patrick. Thanks, guys, for all the notifications on the sound issue. Patrick, hello. Bob, you should go do pre-flight checklist before you fly the plane. Good point. Good point. Thank goodness I can. Very good. No sound. I know. Okay, we'll pass that. I'm going to skip over a bunch of these. Yeah, you got to call me first. Yeah, but I didn't see my phone light up. Did you? We have a group text going. You sold your glop too soon. Yeah. The LNG stocks did really, really well. TZ Burton, hello. We're long of LNG. Cheniere Energy, it looks like it's going to go higher. Weekly chart, bullish key reversal bar. TZ Burton, hello. The lovely Trish, welcome. And Devin, good morning, everyone. Are you down under, Devin? All right, let's get to it. Let's go to the pre-market activity. I'll be honest with you. I didn't want to see a gap up higher here. I would prefer to have seen a pullback, a light pullback overnight, an orderly pullback tomorrow, maybe into Tuesday. We had a big day on Friday. What we're going to do here is that we're gapping up. This is a big move up. This is a 4-hour chart. Let's drill down here. 15-minute view. Whoa, look at that move up higher. Mm. All right. So the NASDAQs are up over 1.33%. Let's go take a look at the S&P 500. Wrong chart. S&Ps are up over 1.13% right now. A big move up higher. Follow through on Friday's close, perhaps. Let me check the news here. I'm kind of disappointed. I know I said I'm bullish, and this is kind of validating what I'm saying. I'm not seeing anything here that would warrant this type of follow through, except for technical. I'd hope for an orderly pullback and a retracement, but we're not going to get that unless we fade overnight. The Russell, these are your small caps. Russell up on par with the S&P 500, looking very, very good. My guess is here, without looking, is that we probably have a pullback on yields and a pullback on the US dollar. Let's validate the thesis. Let's check in with the US dollar. And yields, let's kick it off first. We have yields in front of us. Let's check it out. Yep, gap down on yields by just shy of a 0.5 percentage point. 10-year yield gapping down. That is what is fueling the rally right here, right now. Let's bring up the Dixie. I thought I had this saved. I did not. No sound, no symbol. What is wrong with my production crew tonight? I don't know. Dollar gapping down. That's why you're seeing the rally in equities at current, folks. So a continuation move lower on the US dollar week over week. We are now at new weekly lower lows, I believe. Let's validate it. Yep. 4-hour chart. We are now at lows not seen since 10-5. 10-5. Back to the 15-minute chart. Continue to weaken up on the dollar. Now that we know what the dollar is doing, now that we know what yields are doing, now we're ready to go take a look at other Forex names, because I guarantee Euro is rallying, and it is. Euro's up over a 0.5 percentage point, and I'm going to go over a chart of the Euro. Folks, the Euro, we started watching about 3-4 weeks ago. And I said, get ready for a rally here. It's setting up. And sure enough, last week, we did not break out on price. We broke out on Stokes, weekly Stokes, and weekly RSI. Euro follow through, new weekly higher high this week. That is dollar bearish. Let's check in with the Japanese yen. The Japanese yen just exploded on Friday out of nowhere. At current, though, we're down. We're giving up some of those gains. We're down over 0.75%. Double top, a lower high, 15-minute chart, very volatile, and a breakout point failure. So, and we're down below to new lower lows. So the yen is weak, but the euro is the largest component relative to the dollar in the Dixie basket. So the DXY, which is what we always track, the Dixie, this is the dollar versus a basket of other currencies. At current now, with the yen lower, the dollar is beginning to recover some of those losses. You could bet that names like gold, even the large caps, are probably going to pull back in here a little bit. Let's check in with the S&Ps yet again. Not yet. They're still strong. No real reaction. Let's go to commodities. Let's let everything settle down. We should have gold up. Gold is up by over a 0.5 percentage point. We were higher. We hit 1670, a little bit higher than that, the ounce, and we have faded. Why? US dollar reversal. Always watch the US dollar when you're tracking gold. Let's check in with silver. Silver had a good week. Gold had a good week last week. Silver up 2%. Silver's up 2%. We have a new weekly higher high. These are our core positions, folks. On this pullback, What we've been doing, buying physical gold, taking possession of physical gold, buying more gold mining stocks on the pullback, GDXJ, NUGT, selling calls against those positions. And now these should begin to work for us. And we're also going to be talking about emerging markets, why you need to begin to accumulate emerging market shares ex China. Stay away from China. I have a fund for you. We're invested in it. We're dollar cost averaging into it. Let's check in with industrial metals. Let's stick with copper. I know aluminum moved up higher last week. I thought I had copper up here. Here we go. Copper, we're up over a third of a percentage point, a little bit of a bearish reversal bar thus far on the session. Let's check in with last week's price action. Folks, this chart here, this is a weekly chart with commodities. I don't follow commodities with the exception of positions day to day. But when you take a look at the weekly charts to see what they've been doing over the course of several weeks, you could see that copper, which was very weak through the summer months, has now begun to put in higher lows. Now, what we're looking for on copper is a higher high. What did we do last week? This is actually today. Sometimes they show weekly price action on some Sunday nights for the front week. Sometimes they don't. This is showing today's price action. At current on copper, we are flashing a weekly breakout on copper, industrial metals, precious metals, all moving up higher. Let's check in with energy. Light sweet crude. Light sweet crude up a little over 0.25%. This is a weekly chart. So are we putting in higher lows? We are. Now we need to break out to new higher highs. Let's check in with the intraday price action. 15-minute chart. Consolidating. Let's pull back here, smooth this out. Take a look at a 1-hour view. Consolidating nicely within a larger trading range. Oil looking good. Now remember, you have the president continues to drain the strategic petroleum reserve. But there's an opportunity that's showing on the charts. You have a bullish divergence occurring, meaning energy stocks are breaking out. And usually up until a couple of months ago, a few weeks ago, they would trade tick for tick with oil. The problem is that they're draining the SPR. So oil prices are artificially lower. However, they know that after the election, which is only 18 days or so away, they are going to pause on that because there's not going to be any more left to drain, and they're going to need to refill it. What does that mean? Energy stocks are moving like this. They're moving up higher, bucking the trend. That's where the opportunities are. But I'm going to go over a daily chart of XLE in a moment, telling you why you should not buy it early this week. Beware. On best stock charts for the new trading week, I went over my analysis of BP, British Petroleum, and Apache. Those are my two favorites going into the new trading week. Let's continue on. Let's take a look at natural gas, which beat me up last week. You know, it's a perfect example of your only real defense in this market is staying small on a speculative trade. And thank goodness we're small on nat gas because on a percentage basis, we're down on this trade. I'm not afraid to say it. We made money on the covered calls. They expired on Friday. I had 2 tranches of covered calls. In essence, I was naked on one tranche and they all expired worthless. /NG. Why am I not seeing that here? Not doing anything. So this is a sloppy chart. It's up, but it looks as though we're going to consolidate here a bit longer on natural gas. The key is first rule of buying a bottom. It's got to stop going down. So we're not there yet, We'll talk about it next week. Do we put it in a new weekly low the prior week? As of right now, I would avoid natural gas. I think that the path of least resistance at current is to the downside. Even when you take a look at this hourly chart, and this is me not talking my book. I want to talk my book, but I won't do it because you guys are good enough to spend time with me. Hourly chart, we are breaking the lower band of this bear flag setup. I would avoid it. What else do we want to go over? Let's take a look at agriculture, and then we'll move on over to why we're bullish and what we're worried about. Wheat. Let's go to the weekly charts here. I don't follow wheat every day. Okay, so wheat had a continuation breakdown last week. The question is now for wheat traders is this: do we break to new lower lows? Is this another lower high? A. Do we break to new lower lows? B. This is where you take your crayon out and you do nothing. You watch and see if we break down to new lower lows. I do not believe that this is price for this week. No, it is not. This is last week's weekly candlestick. It's not showing this week's as of yet. Thus far, we're flashing an inside bar. Let's take a look at soybeans. Soybeans had broken down the week of the 26th. This is last week's price action. We are attempting to recapture prior support. I would avoid soybeans here. It looks good. That's not good enough. We want to see it close back above this resistance level. The proof is on the commodity, not on the buyer. The buyers are in control. Bears are in control at current. It may have 3 weeks of back-to-back up weeks, but that doesn't mean anything. We need to get above resistance. We're not there yet. Avoid soybeans. Wheat, we already went over. Let's take a look at corn. Weekly chart. This is last week's price action. It's consolidating. I don't see a reason to buy it here. We're down on the sessions thus far. I think that where you want to buy corn is on a continuation move higher. Weekly chart out of this base. And if you don't have a futures account, you don't need a futures account. You just go over to type in CORN. That's the Tetrium corn ETF. They have wheat, bunch of other stuff. Okay, we're good here. What else do we need to go over? Let's check back in with everything. NASDAQ coming a little bit off the highs. VIX, inside bar. This is now our second 15-minute bar, inside bar. Dollar down here has recaptured a lot of lost ground. 10-year yield, second 15-minute bar is now flashing an inside bar. So these are the two charts right here. 10-year yield, Dixie. 10-year yield, Dixie. Look no further than these two charts. You may be saying, hey, Bob, why are you so worried about the dollar as it relates to the overall market? It only impacts gold, oil, maybe. No, that's not true. Go back to Microsoft's earnings report. I believe it was last quarter. They said one of the reasons why their earnings and forward-looking guidance was a bit concerning was currency conversion. The dollar is too strong. So it impacts the mega cap names that do a lot of their business overseas. Let's go to comments. Devin. Oh, you're over in the Philippines. Gotcha. You're in the military, Devin? My favorite fan. We are not official promoters of of this company. Sexfind.pro. Sexfind.pro. Find love on the best dating site. Awesome. We're going to block you again. I don't know how you keep coming back here, but okay. Sexfind dot whatever it was. Bob, you mean 2/10. I forgot what I was saying. Thanks, Pat. Silver flat. What did I say? 2%? Hi, Bob. Oh, I know what you're saying. I said 2% before. You're right, Pat. Hi, Bob. Finally got in Boyle Friday 32. Rub it in my face, huh? You don't even want to know what my basis cost is on Boyle, Tom, even adjusted for the covered calls that I sold. You know what? Sometimes you go into a position, and this is the problem with these leveraged ETFs. You go into a position and you're saying, I'm putting on a small trade, and you don't watch it. You don't watch it because it's so small. All of a sudden, you're down double digits on the position, meaning percentage gains or losses. And all of a sudden, now you got to manage a trade, which I hate doing. I don't mind doing it with options, but I hate managing long common. That's why I trade so many options. Denny, thank you. Folks, if you could just pause. There are 30 people on right now. If I could ask you to smash that like button, leave a comment if you'd like, if you can. I don't know if you can. If you're new to me, you don't know who the hell I am. What am I talking about in terms of technical analysis? Link below my 5-part video tutorial on my top 5 favorite candlestick patterns. It's free. Seymour Rivers. Now he shows up. My unofficial producer for sound effects. He does it every single week. He's always here on time. This week, Seymour Rivers was late. What was I on? I was on mute. Anyway, welcome, Seymour Rivers. Hope you had an awesome weekend. Thank you for the Data Pack Live episode. You're welcome, Seymour. Silver and copper, both down. No, they're down now. Okay. Pat's out there fact checking me. This son of a bitch is spreading fake news. Tesla was a good buy on Friday too. I didn't track Tesla at all. I should have. I'll take a look at it tonight. Remind me, please. Silver. Yeah. Okay. Tim, Microsoft warns of dollar strength on earnings before the dollar really started. Yeah, exactly right. Yep. Thanks, Tim. Okay. Let's get to it. Let's talk about what's coming up this week. So I'm going to put it out there. I have been talking about the reasons why I see the reason why we can get bullish due to non-technical issues, more trader sentiment, put call ratio, the skew index, things like that. That's what I've been basing my opinion on. But I've been watching the chart saying, okay, are we going to break the June lows? And in many cases we have, but we flash bullish reversal bars to recapture. So that's called an undercut double bottom. So, which is fine. It happens. So let's get to it. Economic data coming up this week. Oh, you know what? I gotta talk about. So I'll talk about it in a moment. It's a funny thing, really ironic that popped up. It has to do with my hip. What's today? 23rd. We're going into the 24th. This is the first time I'm looking at this. S&P Manufacturing and Services PMI. That's the Purchasing Managers Index. Services is already in contraction. So, folks, when you're looking at these PMI reports, again, Purchasing Managers Index, read above 50 or at 50 is a sign of expansion. A read below 50 is a sign of contraction. So in services, which is the vast majority of the U.S. economy, we're already seeing a contraction in the economy. Thank you, Federal Reserve. Now we're looking for a contraction potentially on manufacturing. The median forecast is 51.8. So economists, whatever they're worth, they're still expecting an expansion. Tuesday, Case-Shiller Home Price Index. I'm looking at properties down in Florida. Those properties are still very strong on Zillow anyway. I'm not seeing a rollover down there yet. Consumer confidence coming out on the 25th. Very important number. Looking at I did some scans today. I got to tell you, Hilton, Marriott, Cheesecake Factory. What else was on there? A bunch of discretionary names were on those charts. And the odd part is that the discretionary sector is the one sector that has not broken down below the June lows. So it leads me to conclude, this is the contrarian mind that going here. What am I missing? So October the 27th, that's Thursday. We get the weekly initial jobless claims. We're going to get GDP. That's the first estimate of Q3. That's going to be interesting. Durable goods, big numbers on Thursday. Core capital equipment orders, very important. On Friday, we're going to get the PCE. That's the Fed's favorite inflation index. Real disposable income. The Federal Reserve wants to see that down. They want to hammer the middle class. They want them gone. UMIS consumer sentiment index on Friday as well. So a lot of economic data coming out this week. But folks, it's all about earnings this week. I'll say that going into this week, we're about 50-50 in terms of importance of economics data, balancing out any news coming out of earnings. But as we get towards the back half of the week, that's when technology reports begin to come out in earnest. That's when, after this week, economic data, just throw it out the window. Don't pay attention to it after this week until earnings are over. Now, you may be wondering why I have this guy spinning all these plates up here. We're in a market environment where I want to say, and I've said this already tonight, I am bullish going into the new week. Right now, the futures are validating my thesis. Great. Does that make me sleep better at night? No. Why? Because this guy here is us, right? This is the U.S. economy and the stock market. And what we have here are problems. And anyone could knock down the entire stock market. Plate number one, call it the Ukraine. Plate number two, call it China. Plate number three, call it the Federal Reserve. Plate number four, call it whatever bank over in Europe. Whatever. See, one plate already fell here. I didn't even see that. Be careful of that plate that you didn't even know was out there. Or could it be the Bank of England throwing out 1 p.m., getting a new PM, only lasting 45 days, and now they're looking for a new PM, Prime Minister. There's a lot of spinning plates out there, folks. So while I'm bullish, we want to be cognizant of our risk, right? We're bullish, but we're cautiously optimistic. We know that these plates are out there. All of these plates may be not the reason what knocks this market down, ultimately, because longer term, I do not believe that we have seen the bottom in this market. And at the very last chart is going to be the chart that I share with you that tells you why I do not believe we are done going down. However, short term, I think we move up higher. Now, Thursday, I did not go live. I was not feeling well, so I did not go live. We didn't talk about the Fed's balance sheet. And normally we do that every Thursday night. This data goes from Wednesday to Wednesday, but it's released on Thursday night by the Bureau of Labor and Statistics. I'm sorry, St. Louis Fed, not the BLS. So last week's the Fed's balance sheet, and this is a contrarian indicator, folks. We saw a new weekly lower low on the Fed's balance sheet. We are now at the lows of the year on the Fed's balance sheet. The deficit is actually coming in. However, it's still extremely high relative to where we were in 2019. So all that COVID deficit is beginning to come out of the economy. That's a good thing, but just the national debt in and of itself, not including unfunded mandates, we're still at $39 trillion. And the fact that the market was able to rally, and this goes back to that contrarian comment earlier, was that we saw the Fed's balance sheet pull back on Thursday night when this data is released, yet on Friday, the markets rallied. That's good stuff. the Schiller PE ratio going into the new trading week. We're at the lows of, we're at multi-year lows now on the Schiller PE ratio at 27.66. So we're not as frothy, nowhere near as frothy as we were on valuations. Are we cheap? No. Are we fairly valued? No. The mean is 16.98. Let's round it up to 17. So we're still frothy on PE ratio. Now, when you take a look at the Buffett indicator, it's going to tell you we're fairly valued. That is a very broad term. Fairly valued is a very broad spectrum. Where are we fairly valued? In reality, is down here at this dotted line. And at current, we are 18% beyond the, or 0.6 standard deviations beyond fairly valued. Now, rarely after a big bear market do you just go down to fairly valued and say, okay, bear market over, and then you go back up. Remember, the pendulum swung to extreme overvalued. Now we need to go to undervalued. That is when you know blood in the streets. You got to start buying. Hold your nose, cover your eyes, close your ears, just start buying. Earnings this week. We had a fairly good earnings week last week. The only one that gave us a problem was Lockheed Martin, which was a surprise to me, but it made sense at the end of the week, and it really makes sense tonight. I'm going to go over it in a moment. We're still managing that trade at current. I could have made a profit. I stayed too long the morning after earnings. I stayed too long. The morning of earnings. That was the morning earnings release. All right, so Monday, what do we have in terms of earnings? Not much here. Nothing I would do a trade on for earnings. We do options trades, meaning we sell premium. UPS, definitely a possible trade. Halliburton, a maybe. 3M, a maybe. Microsoft, a definite. Google, a definite. Chipotle, a definite. That eats up a lot of buying power, though. Boeing, a maybe. Facebook, a definite. I try to stay away from these high beta names. You have enough risk in the S&P 500 names when you're selling premium on earnings. There's no real reason to take a crazy amount of risk on these very speculative names like Teladoc or anything else. You know, Shopify is one that I might do it. That's a solid company. Amazon, certainly. Apple, certainly. This is a big, big week, folks, for earnings. And that's why I'm saying don't worry about economic reports all that much this week. Focus on earnings and forward-looking guidance. Because what looks cheap right now, when you take a look at the Schiller PE ratio, let's say that stocks trade sideways for the next month. Well, that doesn't mean after earnings that this goes down further. If earnings come in disappointing, this could actually move up higher despite the stock market staying flat. Let's watch the earnings reports. Merck is doing really good right now. Eli Lilly doing very good. Friday, we have a lot of energy stocks coming out. These are bellwethers: ExxonMobil, Chevron. So this is a very big week for the overall stock market. First Solar is coming out this week as well. Okay, big week, big week. All right, so again, going into the spinning plates, I know this is a bore. It's not exciting, but my job is yes, to provide guidance as to why I have an opinion on equities and where they're going. I think that we do a pretty good job of it, to be honest with you, but I also have a responsibility to remind, don't get overly weighted one direction or the other. Make sure your net liq or your net liquidity is not overextended, especially if you're on margin. So other spinning plates that are out there besides economic data, earnings. Folks, you know, China is a basket case for me. I have a big with them. Many ways. I do not believe them to be a legitimate regime or a legitimate government. And I think that they're going to go by way of what happened to Russian equities in the United States. So I'm going to play this. And I'm going to just read through this other article here so that I'm not killing time. But you don't need to hear the audio on this because there's not much to listen to per se. Just watch the video. So this is the China Congress ends as Xi is dictator for life. Stacks inner circle, royalists, and there could be equity market implications. This guy here that's being lifted up is the former president of the Chinese Communist Party. Quote, the appointments of Xi's associates to the highest positions of power in China indicates that Xi's vision for China will be rigidly executed in the next decade. Now, he has stocked the organs of power in China with his loyalists. He has centralized power with himself. He has eliminated term limits. Now, what's this guy's crime? Why is he being removed from this party meeting? Well, this gentleman's name is, I forgot his name. I thought I had it up here. His problem or his threat to Xi was that he was against military intervention in Taiwan. He wanted a peaceful reunification of Taiwan, or not actually, it was never unified, a peaceful unification of Taiwan and mainland China. That's not good enough for Xi. So Xi wants he also favored positive relations with the West. So that was his crime. And will he be seen again? Who knows? This is our esteemed moronic Secretary of State, Anthony Blinken, an absolute and utter cluster F of a human being, a dumpster fire of a diplomat. So apparently he just got the message that China wants to seize Taiwan on a much faster time frame than previously thought. Again, folks, spinning plate. China's CPC Congress passes resolution to boost armed forces, speed up Taiwan reunification. China calls top chip execs for emergency talks after Biden unleashes economic war. Folks, we're already at war with China. It began under Trump, and what Trump did was really minor. I have not been shopping for bras. This is wrong. I don't wear Spanx. How dare anybody accuse me of this? But a funny story here. So a couple of weeks ago, this company here, Lightbox, I bought a couple of items like shirts and gym shorts off of them. They're cheap, like made in China, and there were these shorts that was showing up, and it showed like it had fake butt like insoles, like cushions, like you wanted a fake man butt. And some people started busting my chops about them, and I'm like, I swear to God, I never looked at these things before. And as we clicked on it, and it turned out to be bicycle shorts. I never shop for bicycle shorts. I would never wear them in my life. Funny enough, I go into the doctor. I go for my surgery. And last week, 2 weeks ago, back to the doctor. And he goes, you have a big hematoma. Big joke. My leg was 3 times the normal size. He goes, listen, go to the store. Go get bicycle shorts. You're going to need them for compression. Talk about irony, huh? It was only the week before they just appeared on the Google. So that's my story. I'm sticking to it. So we're at war with China. It's already begun. We're already at war over in Europe. As far as the UK goes, they're warning their ex-pilots to stop, not do, not go, to stop training Chinese Air Force to battle the West. More spinning plates. I'm not going to do this every week. This will be the last week I do this. I promise the man with the spinning plates. Europe. So the strong US dollar is now buckling banks. It's buckling central banks. It's toppling governments. So Bojo, this moron here, who probably with the backing of the United States. We could have had peace over in Ukraine 2 weeks after the war started. All they needed to do was say, we're not going to join NATO. We're not going to join it. Not attack the eastern provinces anymore that are friendly to Russia. Russian tanks pulled back. This guy decked it. And even at Elon Musk out last week, he did the most horrific thing. He said, let's have peace. And they attacked him. So not only did they get a new prime minister in, they actually wanted this guy to come back to take the spot, and he backed out. I mean, this is how bad it is over in the UK. And it's not just the UK, it's Europe. The EU and England are an absolute cluster F right now. So here, Russia warns of dirty bomb, false flag, and a flurry of rare calls with Western leaders. They are preparing, folks, preparing a provocation with a radioactive device. A Kremlin statement cited that he conveyed a warning over possible Ukrainian provocations involving a dirty bomb. I thought I had more here highlighted. I do not. I think that's enough. Elite U.S. Airborne Division. This is the U.S. Army's 101st Airborne Division, is practicing for war near Ukraine border. CBS gets an exclusive sneak peek. The U.S. Army's 101st Airborne is practicing for war with Russia just miles from the Ukrainian border. It's not just about defending NATO territory, says the correspondent. They're fully prepared to cross over into Ukrainian territory. Folks, if they light off a dirty bomb, this is the first time since the end of World War II, the 101st Airborne Unit has been training over there. If they light off a dirty bomb over in Ukraine and they send in our soldiers, this demonic World Economic Forum and these globalist neocons, both Democrat and Republican, you're going to see a blowback against these people like you've never seen. You're going to send our soldiers into a radioactive, a horrific war zone where there's nuclear radioactive devices going off. I don't think that's going to pass. So these are some of the spinning plates that worry me. Before we go on, we're going to talk about emerging markets in a moment. Let's take a look at what you folks have to say. Bob, I read that Boris Johnson is no go. Yeah, he did back out. That's correct. A Jeffrey named AR and EQT as natural gas. I don't know who that is, Jeffrey. RTX, okay. Take down the CCP. One can only hope. I thought Z dissolved CCP. No, he consolidated power. He needs them. The Agos know us better than we think. Yeah, you're talking about the bicycle shorts. Yeah. Have you tried using another ad block website like Brave? Yes, on my phone, I do that. They will block ads for you. I use Brave, and I don't see pop-ups and add on zero ads like many other websites. Yeah, I could do that. Yeah, I think I'm just lazy right now. I switched on my iPhone. I'm probably going to be adding a VPN to both my PC and my cell phone because things are just getting a little bit too wonky, you know. But thanks, Wesselaw. All right, let's get to it. I want to talk to you about strategy. Okay, so the U.S. dollar last week saw I'm beginning to lose my voice, so I apologize for taking sips. The U.S. dollar last week pulled back pretty significantly, and we stopped going up several weeks ago. So we were looking for a pullback on the dollar. We have one in the overnight session so far. We'll see how we open up tomorrow, but I do think we're going to get lower lows on the U.S. dollar. So we know that gold stocks, silver, gold, etc., they go up when the dollar goes down because they're priced in U.S. dollars. But what also goes up when the dollar goes down are emerging markets. So several weeks ago, we waited on this for a very, very long time. And I looked for the right product. I wanted to buy emerging markets because they rally when you get a weak dollar, because it's like a tax cut for those markets. Their debt is denominated primarily in US dollars. So dollar goes down, they buy more dollars with their dirty currency. So what we started doing was we started buying emerging markets about, I don't know, Franken or what other members on there, correct me on this, like I think 3 weeks ago, 4 weeks ago, nibbling and with dollar cost averaging as we move along. So last week, emerging markets flashed a very nice reversal bar. This is the EEM. So this is all in. This includes China, the rest of the emerging markets, and a nice move on the week. Up over 3% on the week, respectable move, right? But when you back out China, this is what we started buying several weeks ago. We were up 4.5% on this trade last week. This is a continuation breakout. Now, why do we not want China in our emerging market portfolio? Remember what happened back in February, March. Russia invaded the Ukraine. What happened? They wiped out all the shareholders of Russian equities in the United States. I know because I bought options. Thank God I bought options with a lid on, meaning I sold options against the position to help finance it. I took a loss, and it wasn't a huge loss, but I learned my lesson. Avoid, avoid, avoid. Not to mention that when you take a look at EEM, which was up on the week, and you take a look at FXI, which I thought I had up here, and apparently don't. My mouse is being wonky. FXI. China was down nearly 1% last week. So relative to the emerging market world, China is very, very weak on a relative basis. Why do I want to buy China? Why do I want to buy China when you have Xi consolidating power, threatening Taiwan? We're already at war with them. We have bans on chips going over to China. Why do I want to get involved with anything that has to do with China? So that's why we're buying. Come on, man. My mouse will not work. That's why we're buying EMXC, Emerging Markets X China. And I'll be sending out alerts to members when I add more. Latin American shares. This appeared on my screener. They were up nearly 9.5%. Look at this breakout last week on Latin America. A beautiful breakout. Now, we're probably going to get a retrace here. I would not go chasing, but this is a beautiful breakout out of a long-term base. Take a look at a monthly chart here. So look at this multi-year base. This is beautiful. So why do I want to buy anything that has to do with China? Why do I even want to buy the United States when I could buy stocks overseas that are a lot cheaper? And with the dollar pulling back, they're not overly indebted as the United States is. Why not diversify my risk outside the United States? It just makes sense. And I would not want to put that risk in Europe. What else moved last week? Well, I was wondering why Lockheed Martin was giving me a little bit of pressure, not a little bit, a lot of pressure on earnings, because they reported that for the next year, they're going to have weak profitability. However, the shares just surged on the week. And in fact, God damn it, we broke out. Look at this move up higher on Lockheed Martin. Now, I've underwritten the 455 calls as an option writer, but I do have puts down below to offset that risk. So I need a pullback here for this position to expire worthless this trading week, or else I need to roll out the call side and roll out the put side as well. This is tying up a lot of buying power. I would prefer to be out of this trade. So we're looking for a pullback here on the week, ideally back down to 430 per share. And if we pull back to 430 per share, guess what? My position will expire worthless. I'm going to look to buy the shares. This is a beautiful chart. Look at defense in general. A beautiful breakout or move higher on the week, not a breakout. Let me just stand corrected. But defense in general moving up higher. Why? Why all of a sudden? Taiwan. Another defense name, AXON, moving up higher. Big breakout. 2 weeks ago, last week, continuation move higher. This is a buy. This is a buy. And AXON, I do a full detail commentary on it on Best Stock Charts. It's on YouTube, on the website. You want to go check it out. Bill Gates, European energy crisis is good. I don't even know why I kept this up. I think the reason why I kept this up is because there's an enemy within, folks. There's an enemy, a woke enemy within. You have a globalist collaboration with the woke academia in the United States, and they are destroying this country from within. Look no further than this arch nemesis of the investing world, Larry Fink, one of the most powerful bankers in the United States. Take a listen.
Markets don't like uncertainty. Markets like actually totalitarian governments where you have
you have to force behaviors, and at BlackRock we are forcing behaviors.
Markets don't like uncertainty.
Yeah, so this is the same BlackRock that's now being sued by 19 states for forcing companies to block purchases of stocks that do not comply with their green agenda. Larry Fink is a student of, he's a young, what do you call it? Young Zuckerberg is one of them. Trudeau, that communist, is one of them. Young leaders. He's part of the Young Leaders Club out of the World Economic Forum. So this is the enemy within, folks, that we need to fight against. Beware. Know your enemy. So I bring this up because when your policies don't resonate, this goes back to the Roman Empire and probably before. When your policies don't resonate at home and you're about to lose power, you go to war. So beware. This time period here between now and the election is the most dangerous time period that we're in since COVID, in my own opinion. So the Democrats, it's well known they were going to lose control of the House. Now it's quite clear that they're probably going to lose control of the Senate. We now even have a Republican that may win the New York governor's race for the first time since 1994, George Pataki. So this is just a bloodbath setting up. Don't get lured into a false sense of security. Get out there and vote. More escalation. I'm kind of out of order here. Let's skip over this stuff. All right. So why am I bullish on the market? Over the past couple of weeks on Market Wrap and on the week ahead commentary, I've been talking with members about strategy. And the two charts that we primarily focus on are the 10-year yield, which we've been very bullish on. And we had a price target on it, which went back to 2008, 43.24. We hit it last week. When we hit it, we reversed. Because if you take a look at a daily chart here, the high of the session, 43.33. Then we flashed a bearish key reversal bar. This sparked a rally in equities. What's the other chart? The other chart is what I mentioned earlier. The US dollar, outside reversal bar on the week. We had stopped going up several weeks ago, and it looks as though we are getting to roll over. Not only does the dollar look very, very weak, but you take a look at the euro, And the euro, RSI, I drew these lines weeks ago. We were watching out for this. I said, beware the euro. The euro is firming up. Last week, RSI broke out. Stokes broke out. Price did not break out. I think it's going to break out this week. And when you take a look at gold on the week, gold responded. Not a great move up higher here. The gold mining stocks, GDXJ, did a lot better, up over 7.5%. Our NUGT trade, that was up about 13.5% on the week. So a really rock solid week, except for natural gas. Natural gas, you better stop it. Hurting me. Why else are we bullish? This is a monthly chart of the S&P 500. So we also talk about, especially with TrendSpider, folks, we're using TrendSpider now. Automated technical analysis, 35% discount code below, 7-day free trial offer. I give it away free to silver and gold level members. I give a 14-day free trial offer. That's my pitch. They have tutorials below. Go over to their site, check them out. 35% discount code. That's all I'm going to say. So we always talk about hitting support levels and ideally overshooting to the downside, tapping another one, only to reverse to close back above another support level. Check that box. Although we do have a few trading days left to go in the month of October, we're looking pretty good here on the S&P 500. Drilling down to a weekly view. Weekly view. We recaptured support last week, closed strong. RSI, higher lows, higher highs, Stokes hooking up. Momentum is beginning to shift. Not on an intraday chart. We're not day traders here. Not on a daily chart. Way too much noise. That's not enough. That's not enough data for us to get bullish on a market that's been so bearish. We need weekly charts. We need monthly charts to give us the all clear. Now that we have the weekly charts, the daily charts, the monthly charts saying, okay, start going shopping. We want to take a look at seasonality. What is seasonality telling us? This is data going back 11 years, S&P 500. October is up 84% of the times. Right now, that's validated. We're up so far in the month. November, we're up 90% of the times over the past 11 years. I can go back further. It doesn't deviate much from this metric. December, we're up 70% of the time. So we can conclude that given the technical factors, given the seasonality factors, given the fact that we have a lot of sentiment which is still bearish, that we have a good probability of the markets moving up higher absent a geopolitical or a fundamental event here in the United States. Could be an earnings report, could be a bank that goes belly up, could be that the dollar skyrockets higher out of the blue, could be that yields. You know what? Last week they said, you know what? We're going to annoy Desmond. We're going to say, you know what? You're wrong. We're going to plow right through your 2008 resistance level and make you look like an idiot. So it's entirely possible because it wouldn't be the first time, to be honest with you. So those are all out there. Now, I think that we're going to be proven right in the short term. Longer term, are we done going down? No, we're not. Why? It's not how it works. We have not had blood in the streets. We have not had a blow up of a bank here in the United States. Bank of England, you want to say that was kind of a blow up? All right. All right. You want to say the fact that the Federal Reserve is now bailing out Switzerland, is that a blow up? All right. Not really, though. It hasn't grasped the headlines. When am I going to be confident that we are done here? Quarterly chart, the VIX. We need to see the blow off top on the VIX as we did in 2000, where we hit a high of 45.5 around there. 2008, the financial crisis, 89.53. COVID, RSI, VIX of 85.5. We haven't even broken above a 40 handle on the VIX yet, folks. Despite all the selling on the year, it hasn't happened. And this is one bullish chart. I got to tell you, I do not think that we're done going down in this market. That being said, bear market rally, yeah, it could definitely happen. And it's going to be vicious. Let's do some chart requests. Folks, you have some charts you want me to go over? Let's drop them into the chat box. Let me go to the members area here really quick. My mouse is so wonky. It's ticking me off. I'm waiting for you guys to drop something in there, and I'll see what's on the members area. All right, Ticker Cloud. What do we got? AMZN. Larry's in here. We have Joe. Let me get my crayon out. How many minutes do we have left here? We're already over time. So let's bring it up. AMZN. Now remember, they're going to be reporting earnings this week. I am not one of these folks that are on CNBC telling you to buy stocks in front of an earnings report. That's ridiculous. Or to short a stock in front of earnings. I think that's bananas. I think it's incompetence. Sorry. Amazon. Sorry, man. My voice is going. Amazon weekly chart. We have a breakout. We have a higher low. In fact, we broke out above multiple resistance levels last week. In green, that's the algorithm. And then we broke out above 2. I have drawn manually here. I think we're moving up higher, but what we might do first is retrace back down to 114 and a half. We'll be watching for this after earnings. Come on. The mouse worked fine all day long. Now it wants to give me a hard time. I don't have time to correct my spelling. AMZN long. That is a note to myself to remember, do not buy before earnings. Let's keep this active, 14 days. We're good to go. Amazon looking good. Daily chart looking good. If we move up higher, expect resistance at 124.06. Larry, 124.06 on Amazon. Earnings this week, be careful. These other names, Costco, I don't know when their earnings reports are, so I'm going to leave that to you folks to figure out. Costco has put in an undercut double bottom versus June. Well, is this September? That's September. This is a daily chart. I should not be on a daily chart first. Yes. Okay. Costco weekly chart. Here's the June low or May low. We have a higher low. This is what we want to see. Costco. I think that this is a buy. Costco broke down below support at 460 the week prior to last. Recaptured last week. Good looking. Stokes are beginning to hook up. A clear higher low on RSI and now a higher high weekly time frame. Looking good. Daily view. Daily view, we broke out on Friday. RSI hooking up with higher lows, higher highs. Stokes doing the same. I'd be looking for a retrace back down here, daily time frame. I would buy the pullback again. I don't know when earnings are, folks. So just beware of buying stocks in advance of earnings. That is what you call a binary event, meaning things can go real fast, or real bad real fast on earnings, or real good. Costco, bullish. I love this company. Always have. Disney, our communist neighbors to the south. Let's go to the weekly chart. All right, we're going to separate politics from business. We have a double bottom setup on Disney. This is a weekly time frame, clear, higher lows, and now higher highs on RSI weekly time frame. Disney reports, I believe, near the end of the earnings season. I believe. Fact check me on that. We have a W formation forming. We have a price target now on Disney, primarily at 117.50. If it clears that hurdle, we're going up to 127.50 per share. If it breaks out above 127.50, this goes from a trade to an investment because it's going a lot higher. Because a base has been formed and we have changed from being in a downtrend to a new uptrend. Daily chart. Nice breakout on Friday. Again, undercut double bottom, as I've mentioned before, meaning we took out the lows of September. However, we reversed, and now we're breaking out to new higher highs. Good stuff. Disney going up. Last chart up. My voice is going. GOOG. Folks, if I got to ask you to smash that like button, it really helps me out with the YouTube algo. GOOG. Using our friends over at TrendSpider with seasonality. So a lot of functionality here, folks. 35% discount code below. The only company I sponsor or sponsors me. I don't like the weekly chart. I believe earnings are coming up this week as well. I want to be bullish here. It's probably going to push up higher. Resistance at 105.38. Listen, if the Qs go up higher, Goog's going to go up higher. But just beware of earnings because, wow, man, we have really broken down below the June lows. I don't like this chart. Monthly chart. No new monthly lower lows. You know, before I talk about the daily chart, I just want to give a reminder here, okay? You know, the triple Qs have rallied like nobody's business over the past 20 years. Rarely when you go into a new bull market are the prior leaders of the old bull market your continuing leaders into the new bull market. They usually fall by the wayside. Years past, IBM was a bellwether. Intel was a bellwether. Cisco Systems was a bellwether. Now nobody talks about them because they also ran. Oracle, another former bellwether. Nobody talks about them. So remember the Googles of the world. I know this is hard to believe, but these names are becoming passé. Meta, Facebook, which is reporting this week, they're passé. Look at Snap's earnings. That whole sector is they're losing ground to new names like TikTok, which I can't stand, but the kids like, and that's all that matters. So the world is changing. The environment is changing. And let's face it, do I want to buy a tech stock with the 10-year yield above 4%? No, I want to buy energy stocks. So we have a higher low here, daily time frame. We're probably going to move up higher short term with the market. Earnings coming up this week. Not my favorite chart, but yeah, it's probably going to go up with the rest of the market. Just be careful. The weekly chart, the monthly chart, very concerning. Let me take a step back here. Let me give you a number to watch. We close out above 105.38 on Google weekly time frame. You could take a breath. We're probably going to base there, perhaps move up higher. If we stall there, if we pull back there, and then we break down below the lows of last week, it's a short. You got to avoid it like the plague. Earnings coming up this week. Be careful. With Tim, you are very welcome, my friend. Hopefully you hit that like button. Folks, I do this. Jim, you're very welcome. Thank you, sir. Please smash that like button. Oh, you know what? I skipped over two people here. I cannot leave Trader Isaac waiting on this. I will do that. Trader Isaac wants me to use TrendSpider. What time frame, Trader Isaac? This is a weekly time frame. We have weekly trend lines that are off at current. Let's throw them on. Daily or weekly? Okay. Gotcha. So I have them on here, weekly time frames. Frank, I'll talk to you tomorrow, pal. Thank you. Have a great night. I'm not showing automated trend lines here. What am I missing? Do I have the right symbol up here? SWAV. Let me go to the daily chart. Ah, now I know what you're talking about. All right, so the daily chart, yeah. Well, let's come back to the daily chart. Let's come back to this. The weekly chart, if you're showing weekly trend lines on here, Trader Isaac, can you do a print screen and show me your settings? Because maybe mine are off. So here's our upper band of resistance. And what we're doing here is we are continuing to put in higher lows. So Trader Isaac is obviously right here in that what we're doing is we're stair-stepping higher. And you have RSI weekly time frame, W formation. Stokes are beginning to flatten out. A little bit of a cautionary tail there. You want to see them hook up. Daily view. Now, this is what Trader Isaac is talking about. You take them off. I have never gone over this chart in my life. Maybe I just drew that line. Here, we have two resistance levels above. We reversed off of another one. This is the algorithm working for you. Not familiar with technical analysis? Good. Use the link below. If you're new to experience with technical analysis, good. Use the link below because it validates what you may be missing on the charts. You may be great at drawing manual trend lines. However, sometimes you miss stuff. That includes me. So, bullish reversal bar. What I want to do here is I want to create an alert and I want to watch for a breakout. No sensitivity. All I care about is a close above that mark. Trader Isaac, you're talking about this earlier today. Dreamy Ushman. That's Dan's last name, the owner of TrendSpider. He's quirky. Very, very smart. Very, very crazy smart. Drives me crazy. Well, why is there still sensitivity on here? Let's get that off. I don't want any sensitivity. There it goes. Gone. So I want to get alerted when we break out on SWAV. And at the Contrarian Trader, folks, we send out trade alerts to our members. Our alert is set. You can see here on the sidebar. There it is. Let's check out seasonality. This only has 4 years worth of data, so I'm reluctant to talk about it. It's up favorably over the past 4 years, but this is not a lot of data. You want to use at least 10 years worth of data. Okay, so what else do we have here? I know I missed another one. Trader Eyes, GDXU ran like a dog on Friday. GDXU, I know this company. Oh, yeah. Yeah, that's because of the weaker dollar. Weaker yields, weaker dollar. This is a massive move here. This is the 3 times. It's a leverage ETF. Just be careful. Weekly chart. Nice move up higher in the week, but the story here is obviously the daily chart. Here are your automated trend lines. Take them off. Put them back on. Breakout. Dollar pulls back. Gold goes up higher. It's a buy, folks. Thank you very much for being here. It's my honor. I really appreciate it. I'm humbled. Everybody have a profitable trading week. Hit the like button if you could. Subscribe to the channel. Join the Contrarian Trader 14-day free trial offer. Get TrendSpider for free. Not ready to join me yet? Fine. 7-day free trial offer. 2, TrendSpider, 35% discount code below. Check out their website. All the tutorials they have are free. Have an awesome and profitable trading week. I'll talk to you soon. Be well. Come on, Bob. You can log off.